What's up everybody, I'm AK and welcome to the Minority Mindset. Here are 5 things that you don't want to do when you invest in stocks. But before I give you the rundown, make sure you smash that like button and subscribe to this channel so you don't miss our new videos each week. So the first thing you shouldn't do when you're investing is follow the mass media. CNBC, The Economist, The Wall Street Journal, they are always one step behind markets. If the market's ripping higher, then of course every news publication is going to be covering it with tons of excitement saying how great everything is. But the truth is, when things get that good and the market is doing that well that the actual media is covering it, then it's probably the time to start selling. Because at that point, the mania has likely gotten out of hand and it's a signal that the market might be turning. And the same goes for when the market is falling, because as soon as the market starts crashing, you get all these different things in the media like CNBC, markets in turmoil, or USA Today headlines, is this the end of your retirement account? By the time these media people start putting out these bombastic headlines, it's usually the time to buy, because that kind of tells you when fear has reached its peak. And you know, in the markets, you should be buying when other people are fearful. A good rule of thumb is to do exactly the opposite of what you see on TV. If everybody's all freaking out, then it's probably a good time to start buying. And if everyone's super cocky and feeling way too good, then you should probably start selling. The second thing you shouldn't do in the market is go all in. Even if you're super confident in a stock like Apple that just keeps putting out new iPhones and AirPods and all this cool stuff, that doesn't mean you could throw all your money into Apple. Because if you've been in this game long enough, then you know even companies like Apple can take huge losses. No single company is invincible. That's why it's important to diversify. You need to put your money in various different stocks so that all your risk isn't based off just one company. In the markets, anything can happen, so you need to be safe. The number 3 thing you shouldn't do in the stock market is stare at your portfolio all day. The markets can kind of be counterintuitive. Like in most things, if you put in more hours of work and spend more time on it, you're going to get a better result. But that's not necessarily the case when it comes to the stock market. I mean, sure, it's a good idea to do a lot of research and planning before you put your money into a stock, but once that money is in, you need to leave it alone. If you obsess over that stock on a day-to-day basis, you're only going to end up screwing yourself. Because in the stock market, stock prices are going to move up and down day by day. And honestly, the short-term fluctuations are kind of random. But if you're focused on them, then you're going to be stressing out every time your stock goes up a few dollars or down a few dollars. And that type of volatility is going to end up convincing you to break your plan, to start selling shares or buying more or doing something against what you initially intended to do. It takes a serious emotional toll that you don't want to deal with. So the best thing to do is look at your investments on a scheduled basis. Maybe once a week, maybe every other week. It depends on your strategy. But the point is, don't break that schedule. Because the less you look at it and obsess over it, the better you're going to be able to hold on to these stocks for the long term. And we all know the long term is where you make the real money. You don't want to get caught up in those short-term fluctuations. The 4th thing you shouldn't do in the stock market is blindly buy IPOs. And I know when a hot stock is coming to the market like Uber or Lyft or GoPro, it's really exciting and you just want to throw your money in because you think it's great. But here's the thing, most IPOs underperform the market average over a 3-year period. So on average, they're a losing bet. And part of the reason why is that most IPOs are really overhyped before they actually come to the market. That's what the investment bankers that create the IPO help the company do. They go around on their national roadshow and tell everyone, oh, how great this company is. And the goal is to get that stock price as high as possible when it finally launches. But what happens when something is overhyped? Well, usually when it actually launches, you will see the stock price correct, which means it's going to go lower and lower. And you do not want to be caught up in that. The 5th thing you shouldn't do in the stock market is just invest for short-term gains. You need to be focused on the long term. We all just want to get rich overnight, right? But I'm sorry, the stock market is not the place to do that. The way you build true wealth in the stock market is over time, because over time, year after year, is where that compounding kicks in. You need to keep collecting those dividends and let the prices ride higher and higher, and over time that's going to create serious wealth. Now, I'm not saying you can't make money in the short term, because you absolutely will, but if we're talking about millions and this retirement type money, that's going to come to you over the long term. Do you think Warren Buffett got rich by buying companies and then flipping them 2 weeks later? No, he built his wealth by holding his companies for years, and you need to do something similar. Think long term. And if you're interested in investing right now, then make sure you check out our videos, 5 steps to your first stock market investment. I'll link to it up above here and down below in the description. That video will give you a good base so you can start compounding your wealth today. Thanks for watching. If you like this video, make sure you hit that like button and share it with one friend so we can spread the word. Subscribe to the Minority Mindset YouTube channel and hit that notification bell so you never miss our new stock market videos that come out every Monday at 7:30 a.m. Eastern. And if you want more from me, you could check out my personal channel at Fallible, where we publish videos every day all about the stock market and business. I'll see you in the next video. Bye.